What is up, guys? Welcome back to another YouTube video. I'm back here with another one. And before I proceed, I'd like to wish you Happy New Year and a peaceful 2024. So today, for second time in my channel, I want to discuss the concept of liquidity and how really it works and how you can spot it in the market really before you execute the trades. So in front of me right now is volatility 75.1s. And this is a setup that I actually sent to my trader last group. This was the zone, this gray zone over here was where execution was to be taken place, was to take place. I sent the setup while it was somewhere around here. I'll really pause. I will show the picture of the setup at the end of the video, but it was somewhere around here before I sent. And then the results are as follows. You can see it's still buying up to now, really, but I'll also show the results. Okay, so I just want to discuss today what happens during liquidity, because I just feel it is important for people to know, uh, it's just a useful information. So I'm going to start with a top-down analysis, the way I do, like from the higher time frames, until the way I came up with this setup and how I was able to spot the liquidity and what really happened during the liquidity scenario before the market actually took that buy move. So I'm going just to clear everything on my chart, and then I go to the higher time frames to see what I saw, to explain what I saw, and then we can pick it from there. So on the weekly time frame, right now, I just saw like we are going upwards. The market structure that I saw really, or rather, the market structure that you can see in the market is a low over here, and then we had a higher low somewhere around here, and the market came back to this order block, which was the most recent higher low. While we are still here, you need to understand one thing. Even though the market might just want to continue down, it's fine. But the fact that this low generated a very impulsive move from there last time the market was there, then it means there has to be some buyers inside there still, really, because this is a weekly time frame. So there will be a couple of H4 buying candles in that demand zone. We need to understand that. And moreover, if I'm to pull a Fibonacci from where this entire buying move originated from to where the retracement started, then you agree with me that this level, this gray zone where we have our most recent higher low, was lying at the 61.8 Fibonacci level. And we all know of the Fibonacci is that the retracements normally happen up to somewhere around 50 and 61.8 for the move to continue. So that for Fibs, for those who don't understand, is basically used to measure the retracements where it is likely to fizzle out. And especially when you spot an order block where that level of Fib is, then it becomes a very good confluence. When I say confluence, I mean more than one reason to take a trade, or rather to create a setup in that zone. So since trading is just a game of making sure you win more, not to win all, but to win more. So you just really need to utilize all these confluences just to give you, to increase your chances of winning. Okay, so, or rather give you a high probable setup. So when you go to the daily time frame, and then I realized that on the daily time frame, this was what the market was showing. And on the daily time frame, again, if I try to place my lines of sensitivity, then I'm going to remove this gray zone really, so that I explain something on the lines of sensitivity. So around this gray zone again, had this line of sensitivity for me, because you need to understand what happened. Last time the market was there, here we had some buying sensitivity from the very same area within the line. Also here, we had a buying sensitivity. I don't know if I'm to scroll on my left side and then I see if we have been having major reaction around that line on the daily. Okay, let me see daily. We can see here we had some selling sensitivity within that line. So basically those are even enough to tell you that every time the market touches that line, there is some major reaction from there. Also here we had some selling sensitivity that the market fueled, or rather generated a very strong supply, because you need to understand for 1-2 days the market was trying to go out, and then it was able to gather enough supply to generate the entire sell move. So that means somewhere around that line, there are a lot of orders that are being placed basically. So what I'm doing, I'm just backtesting to see what happened in the past within that line. And we have been able to see, oh, we can scroll further. Okay, but those areas that we have already spotted is enough to show us that somewhere around that line, there are a lot of orders that are being placed. But bearing in mind on the weekly time frame also, that is the area where we were expecting a retracement to fizzle out, and we also had an order block there, then this is another reason just to increase your chances of winning such a trade. So on the daily time frame, I spotted this order block over here. There was this order block over here. There was this order block over here on the daily that generated a very strong release. And now you need to understand one thing. Remember, we said this is a line of sensitivity. And then on the weekly, we also say that there is an area where we expected some buying action once the market approaches there. So on the daily, since I saw like that retracement is likely to fizzle out around the 61 level of the weekly, on the daily, I saw what is likely to happen is that we are likely to form a double bottom. When I say double bottom, normally it's a reversal pattern. And that reversal pattern is not forming just out of nowhere, but in a line of sensitivity and in an area that you are expecting some buy move even on the higher time frames. So on the daily, I saw like this is the first impulsive move. So what is likely to happen probably is the market will come somewhere around there again to form the double bottom and then continue with its way up. So I hope we're together with how I'm doing this analysis. So if I go to the H4, this is that order block that I used as my setup on the H4. This is that order block, okay? So this is the order block. I saw last time the market was here. It generated a very impulsive buy move from there that even for sure it broke structure. Even if I switch to the line graph, you will be able to see like the market structure was broken by this impulsive move. And what was it responsible for that is this gentleman over here, this order block. So for me, since I said on the daily, or rather I told myself like on the daily, we are expecting a buy move from here and we are forming double bottom. That is what I was anticipating will happen. And that is actually what has happened in this market really. And also on the weekly, we have seen that we wanted some buy, or rather the market behaved as if it will likely to buy from that area. So coming to the H4, and then I see an order block like this. So this became my point of interest. But just before the market came back there, there was this zone that was created over there. And for me, this was a liquidity zone. So I want to explain what normally happens during this liquidity movement. So during liquidity, what's likely to happen is that people who have not done top line analysis, I don't know, should I put it that way, those newbies who normally trade on the lower time frames, they're likely to spot this as a demand level. Understand? So, and when they spot this as a demand level, and especially if when they saw this fast move from there, so when the market came back there, these guys really wanted to buy from there. And it is okay, they were in profits for a while, but really that's not the profitable way of doing things. Because I want to explain what happens over here. For a person who bought it from here, their stop losses were somewhere down here. Understand? And since this is not that level where there was enough demand to generate that impulsive buy move from, the market had to take this liquidity, these stop losses that were here. When I say liquidity, basically, I mean where stop losses are. I think that is the simplest way I can try to explain to somebody who doesn't understand liquidity very well, or rather the term liquidity. So for these people, what happens that the market maker needs to liquidate these people so that can generate that impulsive buy move. In other words, what I'm trying to say is that you cannot buy something that other people are not selling. I mean, you cannot buy something that it is not sold. Should I put it that way? I hope that is simplest way I can explain. So for the market maker to generate this buy move that you are seeing over here, then he has to make this market in such a way that there are some people that they will be in sell positions. yes, for the market maker to generate a buying move, he has to create a scenario that some people will be in sell positions, and vice versa, of course, when it comes to a sell setup. So let me explain. I continue explaining what happened over here. So this was a liquidity zone. Those people that bought it from here, and then they're in profits for a while, and then this is what happened. Their stop losses were hit. Reason being, this was not an area of sufficient demand. This order block down here is the area that had that enough demand to generate that buy move that even is continuing right now. So another kind of scenario that happened in this liquidity zone is that there are some people who will see this as a support zone that has been broken, and therefore they'll term it as a resistance, and they'll want to sell from there. Understand? So these people that will sell from here, it means their stop losses is likely to be up here. So that is why I told you, normally the market maker, before generating an impulsive buying, he'll want to create a scenario that will make other people to be in sell moves. So those people that sold from here, they were in profits just for a little bit of time. And you know what? Before they know, we mitigated the zone that now had enough demand, and that those people, for those are the kind of the second people that were taken out like that, and their stop losses were hit. So there are two people who are caught over here: the premature buyers, and their stop losses were hit down here, and then the sellers, and their stop losses were hit over there. So I hope whatever I'm explaining is making sense in terms of liquidity. So liquidity basically it takes people stop losses before the intended move, before the market maker generates that intended move. So I hope that is very clear. Once again, just think that this information is I may take a very little time to explain it, but it is very important for people to understand that liquidity scenario. So once again, before the market maker generates an impulsive buying move, he'll want to create a sell scenario so that other people can be in sell positions, and then the market maker can hit their stop losses as now he will be generating that buy move, and vice versa, of course, when it is a sell setup. So I really hope that is informative. That is a very useful information, and I hope you're going to practice and backtest that. So once again, I wish you a good year, a peaceful year, and yeah, until we meet next time.